Okay, today I'll take you through Aura Energy's projects, one in Mauritania, near-term uranium producer, and the second one in Sweden, which is a very early stage polymetallic. I point you to the disclaimer. I won't go through that, but people can read it. So today we're looking at the change. I won't spend a lot of time because most people have gone through that. I'll talk about Aura Energy, what we believe is important, the investment opportunity, the uranium market briefly. Then I'll go into the tourists and Hagorn and key takeaways. So really, what's changing the world today is the focus on decarbonisation. And that's really driving all energies, both in the uranium and the future-facing metals areas, with a clear focus on ensuring that power is secure, affordable, and we've got a base load that can sustain industry in any part of the world. For Aura, we've got Turris. Turris is a low capital and low operating cost project. It can be developed in 1 or 2 phases. We've progressed the 2 phase where the mine is free digging. There's no crushing and grinding. We get, through beneficiation, a significant upgrade of our leach feed to 2,000 parts per million. And we're about to commence a exploration program that we believe will get us very, very much closer to 100 million pounds. And the program for the project is to maintain a 2 million pound production profile for about 16 years, but with resource growth that can be expanded both in production capacity and also time. Hagorn, a tier 1. We've just finished the scoping study in Hagorn. We've mined less than 3% of the known 2 billion tonnes of the deposit. It's a vanadium, it has nickel, molybdenum and zinc in it. But the key driver of some of these value is that the alum shale has high potassium, and in the hydrometallurgical process, we produce a sulfate of potash as a byproduct. And I'll talk about that. And within Sweden, there is a significant change in the political momentum. Recently, they've just put legislation in to increase the number of nuclear reactors by either 8 to 10. We believe that new legislation to remove the present uranium ban, which adds further value to Hagorn, is going to be done in 2024. So they see themselves as being able to produce most of their uranium and those sort of critical minerals as they move it forward. When you look at the Turris project, you've got just under 60 million pounds, 16-year life mine with a short-term exploration target of 100 million. And as I'll show in a bit later, there's some significant resource growth potential. It's development ready. We've got all of our environmental approvals in place. We've got an exploitation permit complete. We've also finished our mining conventions, which give you a 30-year life of the tenement, which can be renewed for a further 30 years. And that determines your tax rate at 25%, your royalty rate at 3.5%, and your VAT requirements for your capital and operating. We have an export permit that's in process. Under Mauritanian law, once a company gets an exploitation permit, the export permit comes with that. And we're just working with the government now on the protocols and procedures to commence export. We've spoken to the Port of Nouakchott and got a lot of support to start exporting through that area. On offtakes, we have an offtake with Curzon, a trading company out of the UK, and like other speakers have talked about, the momentum for for utilities now to talk is building, and we've put several proposals through that we're progressing to get into offtake agreements. We're progressing conversations on financing, both your standard debt financing but also hybrid debt financing, also talking to potential strategic investors and strategic partners. So that's progressing well. With Hagorn, as I said earlier, we've finished our scoping study, which showed the strong economics, and we now will start drilling in the next several weeks in around our present leases, where we're pretty confident to start getting our resource closer to 100 million, which seems to be a figure that most of the market would prefer. Corporately, diluted capital about 220 million, 8.6 million in the bank, 16 million, just over 16 million shares, 600 million shares issued, and predominantly we are owned out of North America. About 40% of our shareholders in North America, and with some domestic and private investors involved in that as well. I won't talk about the uranium market. Everyone's talked about it. One, in terms of the deficit that is in process at the moment, but the forecast. And the only other example I'd throw out there is about 3 weeks ago in Xinhua news agency, the Chinese are looking to build 6 to 8 reactors per year. Generally in the West, we build 1 a decade. So you can see the demand that's coming out of that area. For Mauritania, as talked about, Tiris, initial capital in our EFS was just under $90 million. Then we can expand that with another 90 million, which will produce 2 million pounds per year. All-in sustaining costs are below $30 a pound. All-in costs around 35. Permitted, ready to go, and looking for resource growth. What differentiates Tiris from many other processes? The ore body is contained in basins in calcrete, and the carnotite ore sits on the edge of that calcrete. So for beneficiation, when you put forward about 285 parts per million that you mine out of your pit, and you put it through a sizer, a washing, and then filter it, about 10 to 15% of that material will go into your leaching circuit. So just by sheer size of our leaching circuit is significantly less than most other people. The other part is that you see a leach grade of nearly 2,000 parts per million. And that is where we see the significant benefits. So there's no crushing and grinding, there's no drilling and blasting in the mining. The average mining is about 4 metres of depth, with the deepest area 7 metres, and then we just go into a packaging precipitation plant. So at 2 million pounds a year, we'll have 4 modular beneficiation plants located at various deposits. You'll have 2 leaching circuits, each producing capable of treating 250,000 tonnes a year, and your back end can produce about 3.5 million pounds. And this is the reason why we're looking at additional resources, because for another $90 million in this circuit, you could then bring this up to close to 3.5 million pounds. So that's the benefit. And you can see the difference between what are the mine grades from various projects to what are the leach feed grades. So there's significant opportunities in that. Strong economics drive this project. So in 2023, we're coming to the end of our front-end engineering design. At this stage, we don't see significant movement. Our capital should be below 100 million, and we will see a slight increase in our all-in sustaining costs, but that'll be certainly in the low 30s. So the economics, we don't see that impacting a great deal. Our offtake contracts are progressing. We've put several offtake proposals forward. Some of those are moving forward to further discussions in the coming months. So we're pretty confident that we'll be able to get something there. Our financing, we are talking to various parties, and we're confident there's opportunities to get this project financed. Once that's done, you go into the detailed engineering, get your long lead items, get construction preparation. On this first phase construction, it's about a 18-month construction time period. On the larger project, if we go to the larger project, that's at about 2 years. So it would have us in production late 25, early 26 for phase one. And if we go to the bigger build at the start, that would have us in production in the second half of 26. So very much into production quickly. This is what we're looking at to do at the moment. You can see the various areas of our resource. And what we found is with some further work in these areas, you can see the dark blue is the resources, and that light turquoise is the areas that we think from radiometric surveys that there is additional potential in resources. And you can see it in this slide here. If you look around here, you can see that you've got some high-grade drill holes outside the resource area. You've also got some high-grade drilling results to the north and also to the south. And what we've done is gone through each one of those various areas, and we've come up with a target somewhere between 8 and 32 million pounds. And that work should commence relatively soon with the results coming out progressively in the first quarter, but this will be finished in the first quarter of 2024. For Hagorn, a large project. Certainly there's a change in focus in Sweden. You've got a vanadium market through the increase in vanadium flow batteries that's increasing, with predictions that the present consumption of vanadium will grow from about 100,000 tonnes a year to somewhere between 300,000 to 400,000 tonnes a year by 2035. So with that, with our feasibility at the average vanadium price of the last 10 years of about $7.50 a pound, you can see the strong financials that you get. So you're getting NPVs between just under $500 million to $1.3 billion, strong IRRs, and if you then add the uranium into it, it just adds further value, a very quick payback. And this is all from 3% of the resource. With the project, we've got some significant benefits. The vanadium accounts for 47% of the revenue. Due to the chemistry, we can produce sulfate of potash, and that produces 30% of our revenue. If you recover the uranium with the overturning of the uranium ban, you get 14% of your revenue. So you've got a lot of opportunity and scalability with this project. This is something we're progressing forward and working closely, and we're starting to talk with some major strategic partners that this sort of fits as a tier one project better in that area. So key takeaways: there's a change in the energy demand. It's growing. It's going to grow 3 to 4-fold in the next 20 odd years. We've got a near-term production in Tiris, which is low cost in capital and operating cost, and significant potential to grow. And then we've got a pipeline, not only just at Tiris, to grow that to upwards of 3.5 million pounds, but you've also got the Tiris project, which is a project which will go for somewhere between 150 and 200 years. So it's significant. Thank you.